Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with John Mousseau, Chief Investment Officer and man about town. What do we have today on a Friday, Moose? I was chuckling to you earlier, although it's not always funny. I looked down at my phone. I was going into a meeting. Dow was up 150 points. I was 2 minutes early for the meeting. I looked back down. Dow was down 500. Came out of the meeting and find out that there was a White House commentary.
Last thing is maybe you'd rather had something wrong with your phone.
That's right. We've been through that. We've been through that before, right? March, April, markets reacting. Why did markets react? Well, you've heard me say it many, many times. Positioning. Positioning is what dictates reaction to news. So, was the market a little bit out over its skis in some of the higher beta or higher growth areas? It looks that way.
Sure.
Market told you it was, right? When you see that kind of drawdown, people were out of position. What we make out of one day within the Cumberland shop, it's not too much. We have what, in my parlance, we've had a lot of stocks on stems. Stocks on stems need to pull back either through price or time. Time is the preferable way. That's where you just grind along and those stocks kind of reset. The other way is price. So as you pull back 2, 3, 4, and some of the higher beta names or the tech names, you got a good 5, 6, 7% pullback. What this did was bring the 30-day run rate on the S&P down to just a 50 basis point gain.
Yeah.
So again,
a little bit of a reset.
Right. Do we know what Monday morning brings Tuesday? No. But we have different levels where we want to get involved. We're fairly quiet in the portfolios this week. The one trade on the equity side we had, John, was in tactical. Talk about stocks on stems. Lam Research, LRCX, up 50% in 2 months. On Tuesday, fortunately, we took that in half. We took that position down in half. We sold half. That gives us a little additional cash to work with. We have our eyes on names to complement the current portfolio. But this was the day of bonds. What a bid.
Unbelievable. We're up well over a point on Treasuries from 10 years on out. And, muni markets done well. And, they priced the AAA scale earlier in the afternoon, so they're probably not reflecting the strength. But look at the 10-year Treasury down to a 405 and the 30-year Treasury down to a 463. Those are down 7 or 8 basis points on the week, almost all of it today.
Yeah.
And it's remarkable, driven, yes, by what happened, in the equity markets, because of what the president said, but also because of the continued shutdown in the federal government. And not only now are you entering into the time period where people are not getting paid, but now the president starting to say, I'm firing a bunch of people. Whether it gets held up by the courts or not, we don't know yet. But we do know this, it creates more uncertainty. Muni bids today down 4 or 5 basis points, or not even that, 3 or 4 for the week, but very well bid in the market. 286 on the 10-year AAA scale. You got to remember, it wasn't that long ago. That was like a 3 1/4.
Mousseau,
crazy.
I was just thinking back to how attractive even longer.
Longer.
It was only within the year, but where you're buying 10-year munis with a 350, 360.
Yeah. Those days right now are a little behind us. But listen, we're gonna have some opportunities here with some supply. This one chart we want to throw up is just the 10-year U.S. Treasury bonds and yields, and going back. And what you see on this is you see the drop. Remember, the Fed made their decision on cutting rates back in September. It was always the buy on the rumor, sell on the news, and it almost hit 4%, and then quickly rose almost up to a 4.20. It's turned around, it's come back down, and what's been driving it? It is this government shutdown. And as we said it last week, it's the uncertainty that when you see uncertainty out there because of the shutdown, what do people do? They will pile into the most liquid instrument in the world, the U.S. Treasury bond.
Right. The run to Treasuries will always be the consistent bid
Yes.
in any kind of fear moment. And again, I don't want to overstate it. You know, we made new highs yesterday. S&P's
Right.
2.5, down 2.5% off its highs. You know, what people get, where they get stung a little bit, and by the way, that includes us in some of those positioning, anywhere where you own tech,
Sure.
is if you're over allocated today, that feels painful.
Yeah,
you know?
but remember, you just mentioned up through yesterday, you were, setting records and kept going higher, and the equity markets kept going higher, even as bond yields were declining.
Yeah.
Doesn't always happen.
No. So next week will be interesting. I know we say every week is interesting, but I certainly have a feeling we'll get some levels on names that excite us, names that attract us to put some capital to work. Where we have the largest slug of capital is in tactical trend. US ETF and US core would be more a rotation within the strategy.
Right.
So, okay, enjoy the weekend. Thanks for joining us. We always appreciate it. See you next Friday.